Welcome back to our monthly livestock report. Appreciate you joining us. I'm Coulter Brown from the Northern Ag Network. Well, for all the optimism there's been for the cattle market in 2022, it kind of started out a little rough in January. The cattle futures and cash were trending higher to close out 2021, but January reminded us that we're not quite through all the headwinds. We're going to talk about some of those headwinds today. Of course, looking at the cattle futures and cash. We'll talk about the feeder cow markets, maybe even look at the bulls and sheep too. And of course, we'll look at the recent cattle inventory and on-feed reports and talk about the policy that's being debated on cattle markets. That's certainly continuing to be a hot topic. First, though, I want to thank our sponsors. Ag Risk Advisors continues to join us. If you have questions about price or weather risk management, definitely talk to Ag Risk Advisors. Especially important to be thinking about LRP this time of year. The calf market usually hits its high in the spring, and there's an opportunity to put a price floor on those calves with livestock risk protection and leave the top side open. You can get those daily LRP rates at lrpadvisors.com. Do want to thank our sponsors that make this report possible. Eide Bailly joins us again. Definitely tax time, so if you're like me, you're putting your information together. If you have questions about things like loss carryovers or drought disaster deferral options, reach out to them at eidbailly.com. And thank you to Montana Livestock Ag Credit. There's definitely uncertainty right now with what interest rates are doing. If you need a trusted advisor in your corner, definitely talk to Montana Livestock Ag Credit. They work in both operating loans and long-term loans. Well, as we get to talking about those cattle futures now, they did see pressure in January with the feeders catching the brunt of it, but we kind of have to take it piece by piece because there's been a lot of different things impacting the market. First off, right at the start of the year, we saw COVID cases increasing nationally, and that slowed down the processing pace, as the packers said that got into their labor force and caused many of them to operate with reduced capacity. By the middle point of January, we were 60,000 head under the target harvesting pace, and while that did improve, it definitely took some money out of both the feeder and live cattle market. Of course, when we heard a lot about the tensions between Russia and Ukraine, we talked a lot about that for the wheat market, but it also impacted corn, and combining that with a lower forecast for the South African crop, we saw corn prices jump up well over the $6 mark. They finished the month of January just a little bit under those contract highs, but still that increased cost of gain is weighing on the feeder market and easily taking $100 of profitability out of those feeder cattle. The last thing we want to touch on here when we talk about the bearish influences on the market is the cattle on feed report. That report was expected to have a total on-feed inventory down slightly from a year ago, but actually came in higher. The placements number is where it got really bearish. Triple what was expected in there, 6% higher placements, and like we say, that did force the market lower. But it's not necessarily all bad news. While we did lose some currentness with that cattle on feed report, it's not more cattle in the pipeline, it's just more cattle that are going to be marketed in the summer. The fact is, cattle supplies are coming down, and many of those increased placements were due to the drought. So there is an effect there that we're going to talk about a little bit later here. But first, I want to look at where the futures finished in regards to where they were the month prior. We did see the nearby feeder cattle futures down from where they finished the month before, but other than that, we saw March and higher. You look at where some of these deferred futures are. We've got feeder cattle for August that are clear up at 183, October above 185. In the live cattle, April is hovering above 144 right now, and as you get to the end of the year, December live cattle at 146.5. The cash market was pretty interesting this month. With all those bearish factors I talked about, you'd think the cash would plummet, but it only dropped about $2 to $3. Now, that's not exactly good news, but considering how poor packer participation was in the cash market, we could have seen that price fall even further. We saw the packer participation, so cash volume of sales, down 29% from where it was a year ago. So to be only down $2 to $3, not that bad. We actually finished the month with live cattle 136 to 137 and dress sales at 218. Now, before we get to some of our regional auction markets, I do want to touch on the big cattle inventory report that came out at the tail end of January. That report gives us an idea of where we're at as far as the cattle cycle goes, and specifically looking at the contraction in the beef cow herd, especially with the drought over the past year. USDA said that the beef cow numbers were down 2% from the year prior at 30.1 million head. and that's the smallest the herd has been since 2015. And 2% contraction may not sound like much. It's actually the steepest contraction we've seen since the drought of 2012. So we did see a substantial loss in the cow numbers. You can see some of the state-by-state numbers across the West here. Montana was down 6% in beef cow numbers, North Dakota down 2%, South Dakota 11% lower, Wyoming, Colorado, and Nebraska all down 3%. So there was an effect from that drought for sure. I think a lot of us expected it to be worse than what USDA reported there. And you know, we see these big drops in cow numbers. They didn't all turn into ground beef. A lot of those cows moved to another part of the country where they weren't affected by drought. But looking at the current drought monitor map, the drought is moving south and it's moving east. So it's possible we see that drought linger or move into some other areas, and contraction is likely for another year, especially looking at the replacement heifer number in that inventory report, down 3% from a year ago. So not a surprise to see more heifers ending up in feed channels, not being retained in the herd. So we're likely to see numbers continue to march lower here through 2022, but the positive aspect is we're bringing supplies down, leverage is going to return to the cattle producer, and hopefully profitability will improve as well. Now, as we look at some of our auction markets here, January is a busy time for selling feeder cattle. Certainly started out that way with the diamond ring sale that started the year. Prices were definitely higher as they were reacting to a sharply higher fed cattle market through the end of December. Now, you tell me if you think they're high enough to where they need to be. We did see 5-weight steers for near-term delivery selling 195 to 205, 6-weights 178 to 185. Current delivery 7-weight steers sold mostly 170 to 180, but getting out April to May, they were 185 to 196. Since that sale, we saw the market steady to a little bit lower. At Torrington Livestock, we saw heavier 5-weight steers 190 to 198, 650 to 700 pounders 178 to 186, and the lighter 7-weights 167 to 173. The slaughter cow market showed a lot of improvement in January, really some of the highest prices we've seen since the early fall. $4 to $6 higher at the Billings Livestock Commission, with the bulk of the cows 59 to 65. Some of those thinner cows still bringing low to mid 50s. Now on the bred cow market, that's where things are going to pick up here a little bit through the spring. At Faith Livestock, we saw the bred heifers 1550 to 1650, young cows 18.5 to 2050, and solid mouth cows $1,200 to $1,400. It's definitely bull buying time. We're seeing those bull sales pick up, and they'll continue to do so. Here's just a few of the recent sales that we've seen. At Redland Angus in Buffalo, Wyoming, they sold 72 bulls, averaging 75.45, and Marcy Cattle in Gordon, Nebraska had 176 bulls selling with an average of 54.17. The sheep market did not slow down in January, just stayed firm. We saw those 60-pound lambs at the Newell Sheep Yard selling 366 to 371, most of the 70 to 90 pounders ranging 315 to 340. So that definitely keeps our sheep producers happy. As we wrap up the report here, like I said, just wanted to touch on an update of the cattle markets. We do have this bipartisan Senate bill that pushes for regionally specific mandates on cash cattle trade, as well as the cattle contract library and increased fines for violations of the Packers and Stockyards Act. The American Farm Bureau voted to support that bill with the exception of mandates on cash cattle trade, and CBA debating the very same policy here right now. So we do need to see some action because livestock mandatory reporting expires on February 18th, and that's thought to be a vehicle to pass any sort of cattle market reform. So the House has already passed their version, the Senate hasn't done anything, and of course it all seems to stem right now on the cash trade mandates. The other thing I would mention is the Biden administration has really zeroed in on the meat supply chain. President Biden himself has fired several shots across packer bows, really kind of accusing them of some profiteering during the pandemic, and so we could see some changes there. The president said he'll put $1 billion towards expanding meat processing capacity for small and mid-sized independent packers, so we're going to see some increased hook space. We have the attention of both lawmakers and the public here, so it's up to the cattle industry as to what they decide to do, but we've got the chance to do something here. It'll be interesting to watch over the next couple of months. That's going to do it for this month's Livestock Report. Thanks for joining us, and thanks so much to Ag Risk Advisors for their continued sponsorship. From the Northern Ag Network, I'm Colter Brown, and we'll see you down the trail.